So today we're going to talk about Chapter 18, Process Costing. And we're going to describe the flow of cost through a process costing system, calculate equivalent units of production for direct materials and conversion cost, prepare a production cost report using the weighted average method, prepare journal entries for a process costing system, use a production cost report to make decisions, and prepare a production cost report using the first in, first out method. Describing the flow of cost through a process costing system. How do costs flow through a process costing system? Job order costing systems allocate costs by job. They're used by companies that manufacture a unique product or provide specialized services. Process costing systems help to allocate cost by process. They're used by companies that manufacture identical units. And a process is one of the steps in manufacturing production. So here we have a job order costing versus process costing diagram. And we see here we have the company type, cost accumulation or work in process inventory, record keeping, and the timing of cost transfers. And then in the other columns, it's showing us we're comparing these to job order costing systems and process costing systems. So for instance, when we look at company type, in a job order costing system, manufacturers batch of unique products or provides specialized services. With a job order, they're working with batches of unique products or specialized services. So think of unique or specialized. In a process costing system, they're working with homogeneous products through a series of uniform steps or processes. And then when we look at the cost accumulation for job order costing, they accumulate their cost by job. For process costing, they accumulate their cost by process. For work in process inventory, with job order costing, we have one general ledger account with a subsidiary ledger containing individual job cost sheets. For process costing system, we have separate work in process inventory accounts for each process or department. And then when we look at our record keeping, we have our job cost sheet for each job under job orders. So they keep a job cost sheet for each job. Whereas for process costing, they separate their work in process they have a production cost report for each process or department. For process costing systems, for record keeping, they have a production cost report for each process or department. And then the timing of our cost transfers. For a job order costing system, we transfer the cost when the job is completed. So whenever we've completed the job, that's when we will transfer the cost. For a process costing system, the cost is transferred at the end of the accounting period. Companies use process costing to determine the per unit cost in order to control cost, set their selling prices, and calculate account balances for their work in process inventory, their finished goods inventory, and their cost of goods sold. So here is a diagram that is it's showing us the comparison of the cost flows. So we have the cost flow for job order costing and the cost flow for process costing. So when we look at the first one for job order costing, it's showing us, we have our direct materials, direct labor, and manufacturing overhead. And those are all sitting in work in process on the balance sheet at the same time, roughly. And then they move to our finished goods inventory, and then they move to our income statement. If we look down at the second one for process costing, we've got the same direct materials, direct labor, and manufacturing overhead. But what they've done here is, instead of having each individual job listed out, we're in a work in process stage for mixing. Then we're in a work in process inventory stage for molding. Then we're in a work in process inventory stage for packaging. So instead of having it separated by job, like the first example, we have processes. The process of mixing, the process of molding, the process of packaging. Now we're going to talk about calculating equivalent units of production for direct materials and conversion cost. So here we have the assignment of Department 1 cost at the end of the period, and we've got total cost incurred during the period in Department 1, which equals the costs that are transferred to Department 2 at the end of the period, over the cost remaining in Department 1 at the end of the period. Equivalent units of production, also known as EUP, it measures the amount of materials added to or the work done on partially completed units during a period. It's also expressed in terms of fully complete units of output. Conversion cost. Direct labor is a small part of manufacturing cost for highly automated manufacturers. To simplify accounting, direct labor is combined with manufacturing overhead, and it's called conversion cost. So conversion costs are the cost to convert raw materials into finished goods. Can anyone think of an example of conversion cost? So an example of a conversion cost could be the cost of your direct labor that's related to the job. Now we're going to talk about preparing a production cost report using the weighted average method. How is a production cost report prepared? So we have the flow of cost in production puzzles. Here we've got our assembly process. So we got direct materials, direct labor, manufacturing overhead. And for direct materials, we have our cardboard, our pictures, our glue. The direct labor, we've got our workers, that are operating the pressing machines to create these puzzles. We've got our manufacturing overhead, which consists of maintenance and depreciation on the pressuring machines. And then after those items come, go through that process, now we've got some partially completed puzzles. We send those puzzles on to the next stage, the cutting process. They're getting cut, they're getting boxed. We see those, little examples listed here. They're going through their cutting machines. And then after they've gone through that process, now we have our completed puzzles. So a production cost report shows the calculations for the physical flows and the cost flows of the products. First, we're going to summarize the flow of physical units, compute the output in terms of equivalent units of production, compute the cost per equivalent unit of production, and assign the cost to units completed and units in process. Two unique terms are used on the production cost report. So, to account for and accounted for. To account for, does anyone know what the difference is between the two? To account for or accounted for? Can you take a guess? What do you think to account for means? In the process of to account for. What about accounted for? What do you think that means? We've already accounted for them.
So accounted for, that's showing that's showing the amounts or the merchandise that we already physically have accounted for, that we can actually see.
Yes.
Okay.
We have already accounted for it. Perfect. Thank you. So to account for, we're in the process of accounting for it, and then accounted for is just we have already accounted for this. So the definitions that we see here, to account for includes the amount in process at the beginning of the period plus the amount started or added during the period. So it's where we are taking the amount in process at the beginning, and then we're adding in any additional amounts that come along throughout the period. Accounted for shows what happened to the amounts to account for. A lot of twos and accounts. So accounted for, they are either still in the process or they are completed and they've been transferred out. So to account is kind of the early stage. Accounted for is the latter stage, if you want to think about it like that. A production cost report, we have first process and assembly department. So our production cost report, we have here, it's for Puzzle Me, and we've got here, it says we've got our units to account for. They're going to start us with our beginning work in process, our started production, and that's going to give us our total units to account for. And then after we find that information, which we see here is 50,000, we're then going to look at what has been completed and transferred out and figure out what our ending work in process is. and that's going to give us our total units accounted for, 50,000. So when we look here, we've got, if you look a little to the right, it says our equivalent units we have transferred in, direct materials, and conversion costs. And we're saying here that we have not transferred in anything, but we do have some direct materials. So completed and transferred out, we've got 40,000, and our ending work in process, we've got 10,000, and that gave us our $50,000. We also have conversion cost. So for conversion cost, we've got the 40,000, but here we've got in our conversion cost, our ending work in process is 2,500. So that's going to end up, we're going to end up at the total units accounted for would be $42,500 cost to account for. And so they're plugging some numbers in here for us, and they're saying that our costs that were added during the period for direct materials was 140,000. So can you see my mouse? Can you see the arrow that I have for my mouse?
No.
Okay. Let's see. Maybe that. Can you see it now?
Yes.
Okay, perfect. So up here, they're just, this is the information they gave us on the prior sheet, on the prior PowerPoint slide, and this is where they said our direct materials are 40,000, 10,000, and then total units accounted for 50,000. Then down here, they have added in. They're saying that we have nothing for beginning work in process. But then during the period, we did add some cost that need to be accounted for, cost to account for. And they're telling us that the cost to account for is 140,000. So we've got 140,000 and zero. That's going to give us 140,000 for the total cost to account for. And then we're figuring out what is our cost per equivalent unit. So they're telling us we're going to take 140,000 total cost to account for, divide that by our total units accounted for of 50,000. You see here. And that is going to give us our cost per equivalent unit of $2.80. Over here for our conversion cost, so we'll see down here, they told us that our costs that were added during the period was 68,000. We are going to solve this one the same exact way that we did our direct materials. So we have 68,000 here. We're going to divide the total cost to account for of 68,000 by the total units accounted for of 42,500, and that's going to give us $1.60. And then we're going to add these together, and that's going to give us our total cost of $4.40. And that's what they did up here as well. They added those to get to your total cost column. So 140 plus 68 is 208. And then for the cost per equivalent unit, you have $2.80 plus $1.60 equals $4.40.
Okay, thank you.
Not a problem. These are just getting smaller. All right, so for this one, so then, we've gotten down here. This was our last calculation. So now we're looking at step 4, cost accounted for. And so with step 4, what we're going to do is they're telling us we have completed and transferred out 112,000 in direct materials. And we have an ending work in process of $28,000. We're going to add those together, and that's going to give us the total cost accounted for of $140,000. And we'll do the same thing for our conversion cost. And again, we'll add these together down here to come up with the $208,000. All right, so production cost report, second process, cutting department. So the cost of materials from the assembly department are transferred into the cutting department. The transferred costs are called transferred in cost. The weighted average method combines the average cost of equivalent units of production by combining beginning inventory cost with current period cost. The production cost report, second process, cutting department. So here we see we have a diagram, and it is our production cost for the cutting department as of July 31st, 2016. And we have here our units accounted for. Our beginning work in process, they're telling us, is 5,000, and they're telling us that our transferred in is 40,000, so that's going to give us a total units to account for of 45,000. And then our units that are accounted for, we have completed and transferred out of 38,000, ending work in process of 7,000, and that gives us our total units accounted for. Oh, excuse me, I yawned. Our total units accounted for of 45,000. So then the next step, they're bringing us in, and same thing that we did for the last example. So now we have our completed and transferred out units. So we've got our transferred in of 38,000 and our ending work in process of 7,000, which they have told us in this diagram. And so to find the total units accounted for, we are going to take the 38,000 completed and transferred out plus the ending work in process of 7,000, and that's going to give us total units accounted for 45,000. Our direct materials for step 2, they told us that we have completed and transferred out 38,000, and our ending work in process is 0. So our direct materials total accounted for is 38,000. And then we're going to add we've got our conversion cost. So we are, again, 38,000 completed and transferred out is that 38,000 for conversion cost. And then for our ending work in process, we've got the 2,100. And so that's going to bring us to 40,100 for total units accounted for. So then here we're looking at, we've got our transferred in, our direct materials, and our conversion cost. Beginning balance, transferred in, 22,000. And then that was July 1st. And then during July, we transferred in 176,000. So now we have a total of 198,000. Direct materials, we did not have a balance starting, but then we had an additional added in our cutting department during July of 19,000. So we ended with 19,000 in this example. And then our conversion cost, we started We began with 1,200. We had an additional 14,840, and that ended up giving us 16,040. And then again, you'll just add those up. So we're adding that 19,000 and the 14,840 for conversion cost to give us that 33,000, which tells us what the additional add-in was for that period that we're looking at. So the additional add-in for that period was 33,840. And then our totals, we just add everything together. So we've got the total of $233,040. So you can kind of look through this report. Let's see, I want to just make sure it's pretty much the same that we've been doing here. So a lot of this this should look very similar to you because we've already gone through this twice. That basically you're going in, you're putting in the beginning work in process. This is all given to us in these examples. But if you do have any questions regarding, how to calculate, like if it says, what's the total cost to account for? Well, you can go back to one of these slides that we just covered, or this slide, and you can see here where it says total cost to account for. Well, we found the total cost to account for by taking the beginning work in process and the cost added during the period, and that's what gave us our total cost to account for. So you can kind of refer back to these slides for examples on how to perform any of the questions that you might have in relation to this. But this is the same, and this is just like what we did with the other two examples. So they're just showing us how to work through, finding what the total cost to account for is, finding the cost per equivalent unit. And same thing here, they're just continuing on. We covered this in the previous slide as well. All right, so learning objective 4, prepare journal entries for a process costing system. So what journal entries are required in a process costing system? Costs flow through the process costing system in 4 steps. They accumulate, assign, allocate, and adjust. Costs flow from one work in process inventory account to the next, and eventually to finished goods inventory and cost of goods sold. During July, the company purchased materials on account for $175,000. So we see here we've purchased materials of $175,000. So what are we going to debit and what are we going to credit to show the purchase of materials for $175,000? This is how I know if you guys are paying attention. It's right there on the screen. So the company purchased materials on account for $175,000. We're going to debit our raw materials inventory of $175,000 and credit our accounts payable for $175,000. And that's going to give us our materials purchased that are accumulated in raw materials. So during July, direct materials were assigned to the two production departments, $140,000 to the assembly department and $19,000 to the cutting department. $2,000 in indirect materials were accumulated in manufacturing overhead. So we have here, we are showing the journal entries that we used to record these transactions, so you can read through those. And then transaction 3, labor cost incurred. So during the month, Puzzle Me incurred $20,000 in direct labor materials. In the assembly department, there's $3,840 in direct labor cost. In the cutting department, and $150,000 in indirect labor cost accumulated in manufacturing overhead. So they debited their assembly work in process, debited their cutting work in process, debited their manufacturing overhead, and they credited wages payable. In addition to the indirect materials and indirect labor cost, Puzzle Me incurred $35,000 in machinery depreciation, and $20,000 in indirect cost that were paid in cash, which included rent and utilities. Puzzle Me used a predetermined overhead allocation rate to allocate indirect costs to the departments, $48,000 to the assembly department and $11,000 to the cutting department. So here we've debited the work in process assembly, debited work in process cutting, and credited manufacturing overhead. At the end of July, when the production cost report for the assembly department was prepared, Puzzle Me assigned $176,000 to the 40,000 units transferred from the assembly department to the cutting department. And so we see our journal entries here to show that. And then here in this transaction at the end of July, when the production cost report for the cutting department was prepared, Puzzle Me assigned $201,400 to the 38,000 units transferred from the cutting department to finished goods inventory. This is the cost of goods manufactured, and they debited their finished goods inventory and they credited their work in process cutting. And then here in transaction 8, they've sold some puzzles. So it's telling us that during July, they sold 35,000 puzzles. They have already determined from the production cost report for the cutting department that the cost of goods manufactured is $5.30 per puzzle. Therefore, the cost of 35,000 puzzles is going to be $185,500. And we know that. How do we calculate the number of puzzles? We're going to take the 35,000 puzzles times the price of $5.30. That's going to give us the $185,500. The puzzles were sold on account for $8 each. So that's a total of $280,000 because you take 35,000 puzzles times $8. So if we had a question on this one that asked us how much profit did they make on the puzzles, how would you calculate that? We want to know how much did we make off of these puzzles. So we take revenue minus expenses, revenue or profit minus cost. So we would take our, so we know that we sold them for $8 each. So we know we sold them for $8 each. Yes, ma'am, go ahead. And the cost per puzzle was $5.30. So we'll just, we'll figure out the amount that we sold them for. So it says the total amount that we sold them for was $35,000, because that's how many puzzles there were that we sold. And we sold them for $8 a piece, so 35,000 times 8 gives us what we sold them for. And then we're going to take the cost times how many. So the cost was $5.30 times how many, which was 35,000, and that gave us the total cost. And then we're going to take the total amount that we sold them for minus the total cost, and that's going to give us the amount that we're left with, which is what we made, or our profit. The actual manufacturing overhead costs incurred were $58,500, which includes the indirect materials in transaction 2 and the indirect labor in transaction 3, the accumulated depreciation and other indirect costs in transaction 4. The amount of manufacturing overhead allocated to the two departments was $59,000, and that is shown here in our journal entry. So now we're on learning objective 5. So for learning objective 5, we're going to use a production cost report to make decisions. So here, how can the production cost report be used to make decisions? A production cost report can be used to help control cost, evaluate performance, price products, identify the most profitable products, and prepare the financial statements. Preparing a production cost report using the first in, first out method. How is a production cost report prepared using first in, first out method? So we have the equivalent unit of production cost methods. We've got weighted average, and we've got first in, first out. The first in, first out method determines the cost of equivalent units by accounting for beginning inventory separately. A production cost report using the FIFO method. So this is just showing us how a production cost report is prepared using first in, first out. Trying to get it bigger on my screen. So it says here we start with our beginning inventory of 5,000 units, and we have our started and completed in July units of 33,000, and we got our ending inventory of 7,000. So the total units accounted for are 45,000 units. That includes our beginning inventory, our started, and our ending inventory. So here we've got a production cost report using first in, first out. We've got the units, and this should look familiar because we saw the same setup for the last 3 examples that we talked about. But this is our production cost report. We see our beginning work in process, started in production, total units to account for. This is the exact same type of report that we looked at earlier. So we're going to go ahead and go to the next screen. And then here we've got the timing of conversion costs. So we've got our beginning inventory was 60% in June. And then in July, we started and completed we had 40% beginning inventory. We started and completed 100%, and our ending inventory was 30%. And then in August, we were left with 70% ending inventory. So on this next slide, this should also look familiar. So we're performing our EUP, and it's telling us that we transferred in, we have direct materials, and we have conversion costs. And so our transferred in, we have 7,000 that we had in our ending work in process. We had nothing for direct materials, and we had 2,100 ending work in process for our conversion cost. And we went through how to calculate all of that. On the next screen here, we have, it's showing us, so we've got here our beginning balance for cutting, 22,000 transferred in, and transferred in from assembly department during July was 176,000, which gave us a total of 198,000. For direct materials, we had nothing in our work in process inventory, and then for our cutting department in July, we added in 19,000. For conversion cost, we added in an additional 14,840. So how is a production cost report prepared using the FIFO method? Scrolling into this, we're moving to the next step. We've also already seen this earlier, but here it's just showing us, so now we've got, our transferred in, we have our cost added during the current period of 176,000. We divided that by 40, which was the EUP for the period, and that gave us our cost per equivalent unit this period of $4.40. And you follow that same method of calculating for the direct materials and the conversion cost. And then for this one, step 4, cost accounted for, we have our beginning work in process. It shows us here, we've got letters A and letters B. Hopefully you can see those. You can blow this screen up probably on your PowerPoint. But for A, it says beginning work in process. We've got 25,000 divided by 5,000 units equals $5.20 per unit. So that's how they came up with the calculation right here, and they have it written right here for you. I forgot I can point. And then looking at the second one, which is B, for this one it says they started and completed 174,900. They divide that by the 33,000 units, and that gives them this $5.30 per unit. And then here, this is showing us our final report. So we've done all of our calculations, and it brings us to our total cost accounted for transferred in was 198,000. Direct materials were 19,000. Conversion cost was 16,040. And our total cost overall was $233,040. And that is chapter 18.